Okay, hello everyone. I'm James Hart from littlefishfx.com and thank you for joining me for this Orbex education session. I'd just like to point out actually before we get going, as a special thank you for joining me for today's session, we've actually got a coupon that you can use to get 10% off our trade alerts, which are currently up over 3,100 pips since November 2015. So if you're interested in trade alerts, then you can definitely use that. So in today's session, we're going to take a look at one of the most fundamental and also one of the most effective aspects of technical analysis, and that is support and resistance. Now, many people might discard support and resistance as simply drawing lines on a chart and hoping that price bounces or reverses when it hits those lines. And on the face of it, it may indeed seem like that is the case. But to think of support and resistance in those terms only is to totally misunderstand what support and resistance actually are and why they can be so useful to us. So in this session, we're going to talk about the underlying order flow dynamic that creates support and resistance, how to properly identify these levels, the way that you can trade these levels, and then finally, we'll run through the charts live and I'll show you the process that I use for identifying these levels, sharing some tips and insight. So as ever, if you have any questions during the session, please just write them in the questions function and I'll stop periodically to answer them, and we'll also have a quick Q&A at the end. Okay, so kicking off first of all then, what is support and resistance? So the support and resistance levels that we highlight in the market actually give us some insight into the underlying order flow in the market. So support tells us where there has been demand in the market and where we can anticipate that demand remains, and resistance tells us where there has been supply in the market and where we can anticipate that supply remains. And really that's all this boils down to, a game of supply and demand with price driven by underlying orders. So support and resistance levels identify areas where we can potentially get involved, looking to buy price where there's good demand and looking to sell price where there is good supply. So let's look at an example now and talk this through further. Okay, so in this example, you can see that we have resistance overhead where, as we noted, there is a buildup of orders to sell, which we call supply. And then we have demand down below, which is where, support down below rather, which is where we have a buildup of orders to buy, which we call demand. So looking at this example then, we can see that initially, starting over here at the earliest phase of the price action, we can see that there was a lot of demand in the market. We had this really big bullish phase of price action with this series of consecutive bullish candles, okay? We traded all the way up a few hundred pips, and then at this point here, you can see that we sharply reversed, okay? So we had this long succession of bullish candles showing a lot of buying in the market, and then all of a sudden, this buying was totally reversed, and we saw price crashing lower. So from the point that we crashed lower, we can see that price traded all the way back down, almost to the very bottom of the start of that bullish move. And then, as we saw at the top side here, just as quickly as price reversed lower from this point, we saw price reverse higher from this point. So now we know two crucial things in the market at this stage. We know there is a lot of supply at this level here, and we know there is a lot of demand at this level here. So once we've identified these two phases, we go ahead and draw in our support level, and then we go ahead and draw in our resistance level. And look what happens each subsequent time that price trades into either of those levels. So from the low point here, where we know there is good demand because price reversed higher, we traded all the way back up to retest that resistance level. And then once again, just like we saw originally, all of that buying that was strong enough to drive price up into that high level was absorbed by sellers and price was driven lower. And you can see that we actually cascade lower, almost in a straight line from that high point. We trade right back down into that support level where we know there is good demand because we saw it there previously. And as price trades back down into that support level, look what happens. Once again, buyers step in, overtake sellers and drive price back up. And you can see we get a further 2 instances of this happening. We trade all the way back up into that resistance level, touch that resistance level, and sell off all the way back down. So once we can identify this type of situation, once we identify a clear resistance level and a clear support level, we know that all that's happening is price is rotating between stronger supply at the top end of the range where we have resistance and stronger demand at the bottom end of the range where we have support. And once we can identify these levels, we can then look to capitalize on them, okay? We refer to this period of price action as a range-bound scenario, where price is caught in a range of prices, to the low end here, where we identify support, and to the high end here, where we identify resistance. And these levels stand out, okay? Once you've spent a little bit of time going through the charts and practicing identifying these levels, and you become competent and confident in identifying these scenarios, then you can really look to build them into your trading and analysis, because you know that when price is in a period of price action like this, when we trade up into the upper end of the range, we can anticipate that there is going to be good supply and price is going to reverse lower, and we can look to capitalize on that ourselves by trading to the short side as price trades into resistance. And then the converse of that is that once price trade down into the bottom end of a range where we know there is good support, we can look to be buyers in this area, targeting a move back up to the top side of the range. So again, once you start to become competent in identifying these scenarios, these can be really fantastically useful in your trading and your analysis. So hopefully by now we've walked through a little bit of the underlying order flow dynamic that's creating these levels and the way in which these levels form and the way that price generally reacts. So hopefully you're starting to get a clearer picture of what support and resistance actually are, that they aren't just lines on a chart, and how they can be so useful in your trading and analysis. Now, one really key thing to point out at this stage relates to how you actually identify support and resistance, because you'll notice that the support and resistance levels on my chart are actually drawn as thick areas, okay? So these rectangular areas denote the levels of support and resistance. I haven't drawn specific lines, okay? And this is really important to understand, because a lot of new traders, when they're first applying support and resistance analysis to their charts, they get caught up in trying to be overly specific, okay? They're looking to pin price down to a single level, looking to use a single line. So for example, on a chart like this, they might draw the resistance level here as being the very top of this price action, okay? So the very high of these candles before price reversed lower. Now, the reason why this is incorrect is because you need to actually think about what the price action is telling you about the underlying order flow present in the market at this point. So we can see here that price traded all the way up to this high point, and then sellers stepped in to drive price all the way back down, okay? Buyers were still battling at this point. They were still trying to drive price higher, but sellers were strong enough to drive price down to this level, and you can see that this candle actually closed about the third of the way off its highs. So instead of it being a specific level, we actually have to identify an area or a region where there is a tip in the supply-demand scale. So sellers stepped in at this point and drove price all the way down to this level here. So we go ahead and mark in that area. So resistance we identify as being the area between the high of the level and the close of the level. And you can see how the next two candles respond. So the next candle opens up and drives immediately straight back up to the very high of that resistance level. Once we trade up into the high of that resistance level, once again sellers step back in and drive price lower. The third candle opens up and we don't even make it up as far as the top of that level, okay? So we know that this is the resistance area where sellers are stepping in and starting to assert their dominance in the market, okay? And then to the downside here, you can see that we identify demand as being the area between the low of that support period and the close of that support period. So in the exact same way as we identified resistance between the candle high and the candle close, we can do the same on the downside. We identify the low of the candle here, where buyers step back in, drove price back up, and that candle actually closed at this point. So you can see this candle actually closed in the middle of its range. we had a really big bearish expansion bar showing a lot of selling pressure in the market. But then at this point here, buyers stepped in, overwhelmed sellers, and drove price back up. So we go ahead and mark in our thick support level here. And look how important this is, okay? This is important for two reasons. One, it's going to help you capture better trades, okay? If you're looking to be too specific in the market, you're inevitably going to cause difficulties for yourself, okay? If, for example, we had identified the resistance level as just being this very upper line, we would have missed this fantastic touch of resistance here, okay, where price traded right back up to the close of that first candle, where sellers drove price back down. Now, if we hadn't marked that level as our resistance area, we would have missed this fantastic reversal point. And you can see the same is true to the downside, okay, where we had this fantastic resistance, fantastic support level rather, identified as the area between the low of the candle and the close of the candle. You can see that price traded all the way back down, touched the very upper limit of that support level before reversing sharply back up, okay? And these lines aren't plucked out of nowhere. This is the point that I'm trying to communicate to you. This is just a methodical process that you follow in identifying these levels, okay? You can see just how specifically price respects this zone. So we identify support as the area between the low of the candle and the close of the candle. And look, price trades right back down to that support level, bounces, trades right back down to it again and bounces, okay? These are very specific areas in the market, but the point that I'm trying to get across is you don't need to be too specific in how you identify them. Always look to identify support and resistance as regions or zones instead of specific areas. And the other aspect of how this will become useful to you in your trading is it will help you keep you in trades more, because one of the things that I see with a lot of the new traders that I work with is that when they're trading in these range bound scenarios, typically their stops are just too tight, okay? These areas present a lot of volatility because we've identified that what's actually happening to create these levels is we're seeing a shift in the supply-demand scale. So there is a lot of volatility here as buyers and sellers battle it out to assert dominance. And so what you don't want to get caught doing is trying to play these levels too specifically. So you don't want to be buying a support level with a 10 or 15 pip stop just outside of the low of the support level. You want to give yourself some room to let price test this level, to let buyers and sellers battle it out, and then to let the eventual order flow shift take place and for price to trade back up. So this is how we identify support and resistance levels. And again, we've got a classic range bound scenario here. As I said, in these scenarios where we can identify a strong level of resistance and a strong level of support, the dynamic that we're seeing take place is price rotating between stronger supply, okay, stronger sell orders at the top of the range, and stronger demand, which is stronger buying orders at the bottom of the range. So once we identify these classic range bound scenarios, we can look to build them into our trading and analysis, okay? Even if you don't trade these situations, they're very useful in your analysis because depending on the strategy that you operate, certain market conditions will either be favorable to your strategy or they will tell you to stay out of the market at that point, okay? So if you're trading in a trend following strategy, then range bound scenarios are not the best scenarios to get involved in. But if you're trading a mean reversal strategy, then range bound scenarios are exactly the type of periods that you want to be getting involved in. So the next really key aspect of support and resistance, which we're going to talk about, and this will really help you when it comes to your live analysis and expanding your trade ideas, and that is the changing nature of these levels, okay? So again, going back to the underlying order flow that creates support and resistance, we need to talk about how these levels change their status depending on what's happening in the market. And so the typical dynamic that we see play is where we identify a resistance level as being a level where we have a buildup of orders to sell. So each time price trades up into that level, we know that sellers are strong there and they keep driving price back down. So for price to actually break out above that resistance level, we know now that buyers are stronger in the market than sellers are, okay? We know this has to be the case for price to break above that resistance level where all of those orders to sell were built up. So demand overtakes supply, we get a shift in the supply-demand scale, and price breaks out above that resistance level. Now, once we have broken out above that resistance level, where we know now that demand is stronger than supply, well, then we can anticipate that if price trades back down into that level, it's likely to find support because of the strength of demand there, and hence the nature of that level has now shifted. So broken resistance becomes support, and in exactly the same way, if price was to then break back down below that support level, we would know that once again supply was stronger in the market than demand, and so we anticipate that once price moves back below that broken support level, if it retests it from below, that broken support level is now likely to act as resistance, okay? And this is the dynamic that plays out over and over again in the markets, and it really is a fantastic one to capitalize on once you properly understand it and you're able to identify these situations. So let's take a look at an example now, again, talk through what we're seeing. Okay, so a really great example here of exactly what I was just discussing with you. So here you can see that we have a really strong support level highlighted in the market, okay? You can see that price has traded down to this very specific level and it's bounced several times. And again, going back to how we highlight these levels, you can see how I follow the exact same process. I've identified the support region as being the area between the low of that series of candles and the close of that series of candles. So price traded down to this point, buyers stepped in, drove price back up, and we got our close here. So once price has bounced and moved away from that level, I can go ahead and mark that level in on my chart, this area here, anticipating that if price trades back down, there's likely going to be support. And you can see, once again, we get our bounces at these specific levels. So initially, price trades down into the upper limit of the support region, which we highlighted as being the close of this candle. We bounced higher, traded back down, actually this time traded all the way down into the low end of the support region, which we identify as being the low of this initial candle. And from there, we get a period of bounces before price takes off higher. So we've got a really solid support level marked out in the market. We know that there's a lot of demand at this level, okay? Look how many times price has bounced there. Look how clear the reactions have been. We know that there are a lot of buyers in the market at this point. And so as price trades down into this support level for about the 5th time over here, we can see that we actually get a shift in how the market responds. So instead of trading into that level and bouncing like we were doing previously, price actually this time chops around here for a short period, just like we saw over here, where we're starting to get that digestion of orders. But instead of taking off to the upside, like we saw here, price actually breaks down through that support level. So once price is broken below that support level, we know that supply is stronger in the market than demand at that level, okay? All of the buy orders have been absorbed and eroded, and now sellers are stronger in the market at that point. And so once price trades meaningfully below that level, we can anticipate that if price should trade back up and retest that broken support level, it's now going to act as resistance, okay? Sellers remain in the market and are going to look to drive price lower from this level. So this is a really clear example of exactly what we just talked about before in my beautifully drawn illustration for you. But you can see how this actually occurs in the markets, and I promise you that this is a scenario which occurs time and time again, okay? If you look on every time frame, you will see this scenario occurring. Broken support rather becomes resistance, and broken resistance becomes support. And this is a really fantastic situation for you to look to capitalize on, okay? And so as I say, this occurs on all time frames simply because of the underlying order flow dynamic that creates and perpetuates these levels. And so if we actually zoom forward on this specific price period, okay, so this was the region we were looking at initially. So we had this support level here, broken, retest becomes resistance, and look at how that level retains importance in the market, okay? Look how that level becomes a pivotal level for price, and look how many times price reacts when it tests it. So we have some solid touches of support here initially. We then break down through that level, trade back up, we hold as resistance, trade back up, we hold as resistance, we trade back up here, again we hold as resistance and turn lower, but at this point here we can see that the market is starting to shift. We're starting to get that digestion of orders, and then price breaks out above that support level. And so what happens once price is broken out above that broken resistance level? We now find support, okay? So broken support becomes resistance, broken resistance becomes support. So this is a dynamic which constantly plays out, and you can see how over this period that one specific price region was so important to the market, and I'm sure you can think about the type of opportunities that would have afforded you in terms of looking to play reactions off that level. So again, as I said, this is a scenario that plays out on all time frames. We're looking at the sterling yen 1 hour chart here, but this happens just as frequently on the weekly charts and on the 5-minute charts. So if we go ahead and look at a weekly chart of the Aussie yen over the last 10 years, you can see how almost in exactly the same way as we saw with that sterling yen example, we have exactly the same dynamic playing out on the much higher time frames. So you can see that we have an initial support area marked here where we get all of these initial bounces, and again the process of marking these is very simple, where we identify the low of the candle up to the close, and you can see these long wicked candles, okay? This is a really good indication of a strong support and resistance area. Wherever we get these long wicked candles, these represent a really acute shift in sentiment, because it means that during that period, whichever time frame it may be, so this is a weekly period, so it means that in that week sellers were initially stronger, but buyers stepped in to drive price all the way back up aggressively off the lows to close towards the high of the candle. Now if we're looking at that on the hourly time frame, then it means that during that 1 hour period, buyers or sellers were strong enough to aggressively reverse price action. So keeping an eye out for these long wicked candles in the market can be a really good tool for helping you identify these levels. So once we've identified this solid support level, which holds for about 2 years, okay, price trades into it 4 or 5 times over a 2-year period, but then during this period you can see that we absolutely crash down through it, okay? So once we've broken down below that support level, we know that sellers are stronger in the market than buyers are, and we can anticipate that if price trades back up to retest the underside of that broken support level, price is likely to hold and we're likely to find resistance. And that's exactly what happens. You can see we trade all the way back up, retest the underside of that broken support level, and that broken support level now turns to resistance and we sell off. You can see that we trade back up into it a further 2 times, so we actually get 3 touches of that broken support level, which has now turned to resistance, and each time you can see that sellers remain strong enough in the market to hold price off. And it isn't until this period here where price actually breaks out above that resistance level. And so we know now, due to the shifting underlying order flow dynamic that creates and perpetuates these levels, that once price is broken out above a resistance level, buyers are stronger in the market than sellers, and if price trades back down to retest that level, we can anticipate that it's going to act as support. So you can see here that price does indeed trade back down into that very same level that we've highlighted all the way through this period. So look, we're now 2007 to 2014, so we're now 7 years on, and this one area of price is still acting as support and resistance. We trade down into it, we find support, we test it again, we find support, we find support, 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 and then at this point here, we break down below, and then again, just like we've been discussing the whole way through this session now, once that support is broken, we can anticipate that it's going to turn to resistance because sellers are stronger in the market than buyers. And as price trades back up to retest that broken support, it does indeed hold as resistance and we start to trade lower. So I really hope that you can understand now exactly what support and resistance is, how it's down to the underlying order flow dynamic that creates and perpetuates these levels, and just how important it is to the market and the types of opportunities it can afford you, okay? We've seen how on the 1 hour chart, a specific area of price can become pivotal, acting as support and resistance as price breaks through it and breaks through it again. And then we've looked at the exact same dynamic playing out on the weekly time frame here. And the only difference is that instead of a reaction being 20 to 60 pips on the 1 hour time frame, these reactions are several hundred pips, okay? So this dynamic is exactly the same whichever time frame you're trading on. And so at this point in the session, we've discussed two ways in which you can look to trade using support and resistance. We've looked at how you can identify a range-bound scenario as being an area where price is caught between strong supply at the top end of the range and strong demand at the bottom end of the range, and how you can look to sell as price trades into resistance and buy as price trades into support. And then we've also looked at how you can use the changing nature of these levels to identify a break and retest of support and resistance. So if you just practiced identifying these two scenarios and building trading parameters around them, then you can be profitable with your trading, okay? Using support and resistance formed the cornerstone of the first profitable trading strategies that I used, and indeed that I still use to this day, and a lot of the great traders that I know use support and resistance, okay? So each week that I come to the markets and each day that I sit down at my desk, I'm identifying these levels in the markets, okay? I'm going through the charts, I'm looking at the different time frames, and I'm picking out these key levels, and I'm noting down in my journal whether price is trading in a range-bound scenario and how I should be looking to act, and I'm noting down in my journal if price is broken down through any really clear structural support and resistance levels and how I should be alert to a potential retest, okay? And these situations, you can see, actually occur in different areas of the market, okay? So this range-bound scenario typically occurs in a period of consolidation or at the phase before a trend changes. And then these breaks and retests of support and resistance typically occur in trending scenarios, okay? So you can see that if we were in a bearish trend and price broke down through support, traded back up and retested it, you'd actually be getting short in a bearish trend. So these can be a really fantastic setup to keep an eye out for, looking to gain with trend entries into momentum markets. So one final thing to quickly explain before we move on to the live chart and look at how we actually apply our support and resistance levels. And this is something that I really want you to focus on, okay? Because a lot of the new traders that I work with, one of the problems that they have is they'll message me at the start of the week or during the week, and they'll say, look, I've identified this great level on my chart and I'm looking to trade into it. What do you think, okay? And so they'll generally send me a level which is what I refer to as a mature support and resistance level. So in this beautifully drawn illustration that I've got for you again, you can see that this is supposed to represent price trading several times into a support level, okay? And so generally, the situation that I'll see is a trader will send me a picture of a chart that looks something like this. It will be a support level that's been touched 5, maybe 7 times, and they'll say, I'm looking to get long into the support level. What do you think? And I say, I think that's a stupid move. And then they'll be surprised and shocked, and they'll be a little confused, and I'll say, what do you mean? I thought that you think, you know, it's a good idea to trade long into support levels. And the reason for this is that whilst it is a good move to look to capitalize on range-bound scenarios when they're early, okay, when they're young. So where you have a range-bound scenario where price is traded 2 or 3 times into each level, then there is still some scope for that range to play out or for that level to hold. But where you identify a level like this which has several touches of it, then all that says to me is that eventually at some point soon that level is going to break. And the reason for this, again, simply comes back to the underlying order flow dynamic that creates and perpetuates these levels. Because what is actually happening at this level is that instead of the level getting stronger, as a lot of new traders think, so new traders identify a support level with several touches and they say, you know, the level's really strong, it's going to hold, there's going to be another big bounce. And this is actually incorrect, because the opposite is true, okay? The more times that price trades into that level, the more times that that support level is tested, then the more that the buy orders that were initially there are eroded and the less buyers step in, okay? There are an initial level of buy orders in the market which create the bounce, which we see gives the support level. Each time that price trades back down into that support level, more and more of these buy orders are filled until eventually none of them are left. Now, to begin with, new buyers step in once they see this level is clearing the market. So once they see we've got 2 or 3 solid touches, new buyers will be looking to step in as price trades down into this level. But as these corrections from the level fail, so as price fails to take off meaningfully, and instead just sees a shallow bounce before returning down to that level again, well, what happens is the initial buy orders in the market get eroded and less new buyers step into the market until eventually there's no more buying left at this level and price simply breaks through as sellers step over. So the key takeaway from this is that if you're looking to trade a support level, then typically look to trade one that only has a few touches. And again, if you're looking to trade a resistance level, only look to trade one that has a few touches. And this is especially true in a trending market, okay? Let's imagine that the period of price action before this support level was a really big sell-off. So if we had a really big sell-off and we were in a clear bearish trend, and then we identify this really mature support level where price is constantly bouncing into it, then all that says is that although there was buying strong enough to cause this pause and to see a bounce in the market, sellers are still strong enough to stop price from taking off meaningfully, and they keep driving it down into this level. And so eventually that level is going to break, and these can be really fantastic setups to keep an eye out for. Okay, so I hope everyone is clear so far. We've looked at range-bound scenarios. We've looked at breaks in support and resistance. We talked a bit about how we specifically identify support and resistance levels as being regions or zones instead of specific levels. And then I just shared a bit of insight here about the situation regarding mature support and resistance levels. So to cap the webinar off now, what we're going to do is spend a little while actually running through the live chart, and I'll show you the process that I follow in applying support and resistance, because one of the things that I find that a lot of new traders struggle with is actually applying the support and resistance lines. Okay, they get caught up in which areas to highlight, and I know that it can be a little bit confusing, so it's always useful to see how someone who is doing this day in day out for several years actually applies this process to the market. So let me just pull up my chart. Okay, so this is the Aussie dollar daily chart. And this is a really good one to use for this purpose because we've actually got 2 market conditions here. Okay, we've got the trending period and then we've got the range bound period. So this is a really good chart to use for the purposes of highlighting the support and resistance levels. So let me just zoom in a little bit here. We won't start too far up the trending period because obviously in a highly trending market there's a little bit of a lack of support and resistance levels to highlight. So if we start off by looking at this region here, okay, we'll start from the end of 2014 going forward. So the first thing to point out, a really quick cheat sheet for looking to identify support and resistance levels in a bearish market is that you want to identify support as being the level at which we see a reversal occur, and then you want to identify resistance at being the level at which that reversal runs out of steam and the correction fails. So we can see here price is selling off in a really nice bearish expansion phase here. We're moving lower in our trend, and then at this point here we get our reversal higher. Okay, so again we identify support levels as being the area from the low of the candles to the close of the candles. So for those of you, I'll just zoom in a bit so it's easier for you to see. So we've got the low of the candles here up to the close of the candles. So this gives us our support level. So price bounces from this level and trades higher. Now once we trade it up, price moves into this high point, fails and then sells off. We've then got our resistance zone to highlight. Again, we highlight our resistance zone as being the candle highs to the candle close. So this is the candle high of the period, and this is the candle close of the period. So we've got our support, we've got our resistance. So now we walk through and see what happens next. Price trades lower and breaks down through that support level. So once we've broken down through that support level, we know that sellers are stronger in the market now than buyers are, and then we anticipate that if price should trade back up into that level, it's likely to hold as resistance, okay? Now, I know that I'm starting off looking at the prior period of price action. I should point out that this is key to the process, okay? Whenever I'm applying support and resistance to my charts, I don't look at the most recent period of price action and then fit the lines to that. I look at the prior price action, okay? I look at what price was doing yesterday, last week, last month, a year ago. I look to fit my lines to those areas of price action first, and then I walk forward to see how those lines interact with the current price action and if there are any new lines that I need to add in. So price breaks down to our broken support. We trade all the way down to this low, okay? And this is a nice area to point out what happens when price starts to range, because we get an initial area of support here, okay? We have our candle lows and we have our candle close. So this was our initial area of support, but you can see price actually broke just beyond that level and found a really solid value area here. So we got several touches which were sitting just below that level. So we have to go ahead and update our lines. And this is key to the process also, okay? Once you've identified your solid support and resistance levels, then it's fine to leave those levels on your chart until such a point which they stop becoming valid and they stop becoming relevant. But at the point where you're initially applying your support and resistance levels, you need to be aware of how price reacts around the local area of which you've identified them. So once we've identified support here and price breaks just beyond there and starts to base here, well, clearly this isn't the support level we should be looking at. This is the support level we should be looking at. So we go ahead and again mark our support level as being the candle low up to these candle closes, and then you can see what happens once we've marked that support. So price trades higher from that support level. We trade all the way back up to retest that broken support, and just like we discussed in the slideshow, okay, just like we saw with the illustrations I was using, that broken support then becomes resistance because we know that sellers are stronger in the market than buyers are. So price trades up, retest that broken support. You can see we find resistance there, we find resistance again, and we actually take one last attempt at running that broken support. We get a little bit above it before price is exhausted, tops out, and we break lower. We sell off from that broken support level, okay? We trade all the way back down into this new support level, and then we hold there for a little while before breaking lower. And this highlights the aspect that I was just discussing with you about mature levels, okay, and why you should look to be waiting for a breakout instead of looking to fade them, okay, because this is a perfect example of what we've just talked about. We've got an area of support where we've got several touches, okay, and it's in a bearish trend. So once we identify this level, okay, we can see price has been selling off all the way down into this level, and then all of a sudden we stall out. Buyers hold price up, we continue to bounce at this level, but instead of just taking off and trending to the upside, we keep returning to this level and bouncing. And so once you identify this type of level in your charts, then instead of looking to buy as price tests that level, you should be thinking to yourself, right, I'm going to wait until price breaks down beyond that level, because that is likely to signal the exhaustion point at which sellers overtake buyers. And again, looking to identify these levels in a trending scenario is a really fantastic way to capitalize on them. And specifically because in trending markets, unlike these range-bound periods where we get a nice to and fro between the upper levels of resistance and the lower levels of support, in trending markets, what you can often find is the case is more a scenario like this, where price trades down into a level, we find support, and then it breaks, okay? So once you identify these levels in a trending market, these can be fantastic levels to look to play for breakouts. So this is another way that you can use support and resistance. So far we've talked about buying support and selling resistance, but now you can understand how you can actually use the breaks of these levels to initiate trading ideas. So once we've broken down below that support level, price sells off, and then the next correction that we actually get to price action is this period here. So we trade down below that support, which held for several months, okay? This was a really solid support level. Price breaks down below it, trades all the way down to this low point here, and then we get a bounce. So once we get our bounce, again, we go ahead and mark in our support level, which, as we said, okay, and you know by now, but I'm just repeating it so that we reiterate this and confirm the process, is the area between the low of the candle and the closes of the candle. So we have this support region here. Price trades higher, we get the correction, but then the correction exhausts and we trade lower. So we go ahead then and mark in our resistance level as being the high point of that correction to the candle closes. So support, resistance. Price breaks down below that support level. So now once we've got a broken support level, we know that sellers are stronger in the market than buyers, and we're likely to see that level act as resistance if we trade back into it. And that is exactly what happens, okay? We trade down to this low level here, we trade back up, retest that level, it holds as resistance, and we sell off. So now once that has happened, we go ahead and mark in our new support level, okay? And where we get solid candle closes like this, then we have to be a little bit more discretionary with how we identify our areas, okay? Because as we talked about, it's always good to identify a support region instead of a specific level. So obviously here, there is no candle low and candle close because they happen at the same price. However, we can see that as price traded back down, we held here, we held here, and we held here. So this is obviously a strong support level in the market. So now we have our support region between the low of these candles and the lows of these candles. So price trades back up, we actually break out above that resistance level, trade a little bit higher, we don't make it all the way up to this prior resistance level, we sell off, we don't break down to our support level, so we've now clearly moved into a range bound scenario, okay? Instead of price shortly pausing, making these support levels and then breaking down through them, we're now oscillating between resistance and support. So we've now got a clear range bound scenario. So price fails to break down below the low, we trade back up and we trade right back up into this previous high, okay? So you can see initially where we didn't make it up as high as that prior resistance level, well this time we've actually stalled at this level. And so like I talked about a little bit earlier, what is key to this process is going through the market from a prior perspective, so looking at prior price action and fitting the lines which were important to the market previously, and then going through to the current day and then seeing how those previous lines interact with price action and if there are any new lines which you need to apply. And so what is very clear in a situation like this, where prices stop short of prior resistance and formed a new resistance level, this is now a new zone in the market. So we go ahead and enter in a new zone. I'll make these a different color just so it's a little bit clearer for you. So again, we identify resistance as being the area between the high of these candles and the closes. And so now we have our old resistance here and our new resistance here. Okay, this level is important to the market today. So price trades down from that resistance level. Again, we don't make it down to this old support level here. We're caught in this range. And so now you can see our range is actually between this high and this low. At this point here, we trade all the way down to that previous low, that previous support. We hold there initially, but then we break down beneath it. We break down beneath it, but we actually get a fake out, okay? We get a false breakout here before price reverses and trades back up. We trade all the way back up to this pivotal area, okay? And you can see just how important this level was to the market, okay? So we initially identified this level as support here. We broke down, it found resistance. We broke out above it, we traded back here, we found support. We found support. We broke below it, we found resistance. We found resistance. We broke above it and found support. We broke below it, traded back up, found resistance, found resistance, found resistance, okay? So just like we looked at with that sterling yen slide and with the Aussie yen slide, these areas of support and resistance can become really important to the market over several hours, days or months depending on the time frame you're looking at. So identifying these levels on your charts and leaving them on your charts can be a really fantastic way to highlight trading opportunities. So once price trades out above that resistance level, you can see that we break out properly at this point, okay? We got this really big bullish expansion period in the Aussie a couple of months ago. We broke out above all of these resistance levels and look at the area that we traded back up to and the area where we first stalled, okay? We traded back up to these broken lows. So I'll go ahead and highlight these just because I can see that the chart is probably getting a little bit confusing now, especially for anyone who's just joined us recently. But again, this will be recorded and you'll get a copy of this. So for anyone who has joined late and you're a little unsure about what's going on, then please make sure that you watch the recording and you'll learn exactly the process that we use for identifying these levels and exactly why we've identified the levels that we have. So we trade all the way back up to that previous broken support, and now again we understand that sellers are stronger in the market than buyers at that point, and so we stall initially, find resistance there, trade lower, but again look, we trade back down into that broken resistance level which now becomes support and price trades higher. we actually break out above this level. And look, this choppy phase of price action, this is a really good indication of a market that is struggling and a market that is digesting orders, okay? Instead of just breaking out above this resistance level, we can see that price is really struggling here. Buyers and sellers are battling it out. And so although we actually make it up above this level, we eventually collapse and trade lower. And the point at which we collapsed from, look at this prior resistance level here, okay? We've got the high down to the candle close, really great resistance level there. We trade back up, we got this double top, and then we sell off, trade all the way back down, and look at the area we stalled out at, that pivotal price area that we highlighted, this area that was initially support and changed between resistance and support several times over a 6-month period there, still retains importance in the market. After this huge bearish decline, we trade all the way back down to that level, stall out there, and then trade higher. And so from that point, you can see that price action is gradually making its way higher, but for now we're caught in this range-bound scenario between this low and this high. So I hope that's been really useful, and I hope now that you understand the way that I identify these support and resistance lines and the process that I apply. And one important thing to point out here, okay, is that we've obviously just looked at the daily time frame here, and so there might be a lot of areas on the chart where you're thinking to yourselves, I wonder why he didn't highlight that support resistance. That looks like a really important area, okay? And the reason for this is that instead of highlighting every single line on every time frame, what I'm showing you here is the process that you use to identify these levels. So this process is the same no matter which time frame you trade. And so yeah, there are definitely some levels in here, some shorter time frame levels that we would look to identify. Okay, you can see that we have a clear region here in exactly the same way that we have a clear region here. But the point is, we're not looking to highlight every level in this session. I'm showing you the process that you use. And so the way that you identify these levels yourself is that you start from the higher time frames, such as the weekly charts, and then you move down to the lower time frames, to the time frames that you trade on. And so you identify higher time frame levels and you identify lower time frame levels. And then finally, just a couple of quick tips, because again, like I say, from working with a lot of new traders and working with traders who are struggling to master this process and to hone this process, the first is stick to using the clearest levels, okay? One of the things that I see with a lot of traders looking to identify support resistance is they just get caught too up in trying to identify every twist and turn in the market. And so instead of just highlighting the really big important turning points, they're highlighting several lines which they don't need to highlight, okay? Look to highlight only the clearest levels in the market, and this will make your life and your work a lot easier in terms of trading, okay? And then again, reiterating what we were talking about earlier, where we get these mature levels like this, okay, especially in a trending market where we see a support level holding out for several touches, instead of looking to be a buyer, start to think a little bit more strategically, because you know now about the underlying order flow dynamic that creates these levels, and you understand that when a level is being held for several touches like this, instead of getting stronger, it's likely getting weaker, and we're likely going to see price break through it at some point. Okay, so I hope that's been really helpful and useful to you guys. I've enjoyed that session a lot. Thank you for joining in today. It's always great to go back and look through some of these processes, especially support and resistance, because as I say, support and resistance form the cornerstone of some of the first trading strategies that I use and that I still use to this day. And like I said, the exercises that I talked about, such as each week highlighting your lines, going through them and seeing how the market reacts, are really a fantastic way to build your confidence in trading these levels. So just before we wrap this up, are there any questions that I can answer for anyone? If so, please just write them in the chat function. Okay, great. Well, I'm glad that everyone was able to follow that so clearly and understand it so well. And I look forward to catching up with you all next time. In the meantime, take care and good luck with your trading. Cheers.